Good morning. The math ran last night. Here's what changed and how historically similar conditions have evolved. We are operating within stagflation strong regime with conviction. 17 of 19 major economic series aligned. The striking overnight data point. Fear and greed has collapsed to 21.1, extreme fear territory, while VIX sits at 26.72, placing it in the 94.4 percentile of its 2-year historical range. When this combination emerges during stagflation alignment, we have historical precedent to examine. Let me walk through 3 primary signals now active in the data. Signal 1. The 10-year to 2-year spread, measured as T10Y2Y. Current level is displaying green momentum. We define this as 30-day rate of change trading above the 60th percentile of its 24-month historical distribution. In 9 of 11 historical instances when this yield curve indicator carried this momentum during early-stage stagflation regimes, the inflation composite accelerated within 90 days. Signal 2, high-yield credit spreads, BAM ELT 0A0 WIM 2, currently in green momentum territory, positioned above the 70th percentile of its rolling volatility envelope. In 10 of 12 comparable historical instances, spreads compressed rather than widened over the ensuing quarter. Signal 3, core inflation, measured through CPIL-FESIL, also showing green momentum with 30-day rate of change in the upper quintile. In 8 of 10 historical instances, when this metric held such momentum during acceleration regimes, the broader inflation outlook stabilized within 6 to 8 weeks. Now to regime and frequency detail. We are in stagflation strong. Our confirmation score is explicit. 17 of 19 major economic series aligned with this regime state. Historical persistence data from our Markov framework shows this level of alignment persisted in 52% of 11 observed instances. The most common transition away from this regime was acceleration itself, observed in 28% of historical cases. That mathematical observation connects where we stand today to how these regimes have historically evolved. 2 critical if-then triggers are active. If the 10-year Treasury yield crosses and holds above 4.45% for 5 consecutive trading sessions, historically the inflation composite showed acceleration in 9 of 11 similar instances. Second trigger, if the fear and greed index drops below 15 and maintains that level for 5 consecutive sessions, confirmation score deterioration has historically occurred in 7 of 9 comparable instances. The math identified conditions across 19 major economic series this week. That pattern exists, but that is a different conversation. These are historical mathematical observations, not predictions and not advice. Given Analytics is not a registered investment advisor. Hypothetical results may vary from actual results. Market conditions can change at any time. May potential, educational. This is Given Analytics. GivenAnalytics.com.